How's it going, everybody? Welcome back to ETP Finance. My name is Mark, and I'm here to share with you my personal experience in finance and help you build your wealth. Now, today I want to talk to you guys about something where a lot of people view as a get-rich-quick scheme. There's a lot of different investment methods and strategies, and today I want to talk about day trading. So I recently read this book called The Ultimate Day Trader by Jacob Bernstein, and to be honest, it didn't really change my viewpoint on day trading. For those of you who don't know, I went to school for business and specialized in finance, so I kind of already have some pretty defined viewpoints on trading and investment in general. Full disclosure, I don't day trade, and it's definitely not one of my preferred methods, so just take that into account when watching this video. So I want to break down the video as follows. I want to start off by just giving you some basic statistics on day trading, on what's going on in the market today, how people use it. I want to talk about what they preach in school about day trading, and then I ultimately want to get into some strategies that the book talked about in depth. So quickly, just to define day trading, it basically means buying and selling a security or opening and covering a position in the same day without moving on to the next trading day and still holding the same position. There's also something known as swing trading, whereas you hold that position which was meant to be a day trading position for up to a little bit longer of a period, sometimes up to like 2 or 3 weeks, but never longer than that. So without further ado, let's go ahead and jump into some of the statistics. So I did a lot of Googling and research on this topic, and what I found was on average about 80 to 95% of traders or day traders are losing money. So a lot of that has to do with inexperience. You're going against the world's best traders all on the big banks trading floor. You're going against professionals that do it at home full time. And a lot of people are just in general inexperienced with day trading. To be a part of that 5 to 20% that are actually making money, you have to be extremely adept with your strategies and almost operate mechanically like a robot. Again, a lot of people view this as a get-rich-quick scheme, but it's something that actually you need to build up over time. A lot of day traders only make, 0.5 to 2% on their money per day, albeit they're trading with about $100,000 per position. 0.5 to 2% is seen as a victory for a day trader in terms of profit for one day. Okay, so that brings me to my next point, is that if all of us were to start day trading today, within the span of 1 year, 80% of us would quit. Within the span of 1 month, 40% of us would quit. After 3 years, there will only be about 13% of us remaining, and then if you expand that to 5 years, only 7% of traders are still trading after that time. So what this tells you is basically, again, a lot of people see this as a way to make quick money. It doesn't work out, they lose a ton of money, and then they quit immediately. If you're going to be a day trader, you have to be able to stomach a loss on a day-to-day basis, as it's going to happen regularly, even for the most seasoned investors. Okay, so next point is that on average, your individual investor will underperform the market by 1.5% or get an alpha of 1.5%. For traders, the statistic that I found was that on average, they underperform by 6.5%, which is 500 basis points less than your average long-term investor. So what does this tell you? That all the commissions and trading fees and losses on a day-to-day basis, they really do add up on it, and on average, you're going to be underperforming your average long-term investor. Okay, so last stat here, and then we'll jump into my overall opinion, and then we'll talk about a bit of the strategies. So 1.6% of all investors are considered traders, and they account for 12% of the daily activity in terms of trading volume. So what that means is, even though there's a small portion of investors who are actually full-time traders, they account for a good chunk of the trading activity on a daily basis. This obviously makes sense since they're making short-term trades on a daily basis and frequently. All these stats were brought to you by tradessidey.com. I'll put the link up in the card here in the top left corner. Let's go ahead and jump into just my general opinion on day trading. Okay, so having gone to school for finance, I've certainly been bred as a more long-term investor, buy and hold, Warren Buffett. Just be patient with the market. You'll eventually make your return. But one thing I just want to say is that just because traders trade more frequently doesn't mean they don't have a portion of their portfolio invested for the long term. Their day trading money is seen as their risk capital, which they're willing to lose. So what Jacob Bernstein's book talks about is that you should be able to stomach 6 days in a row of trading losses. So for instance, if you're trading with $6,000, you should be able to go 6 days straight, 6 trading days straight with losing $1,000, or that's what you should cap your losses at. You shouldn't go any further than that. because this is something that's bound to happen, and it's happened to tons of people. So again, the $6,000, let's say, that you're investing with is only your risk capital that you're willing to lose. This isn't going to be something that's uncommon for your average beginner trader. You're going to make a lot of stupid mistakes at the start. So as a day trader, you're kind of considered at the bottom of the totem pole in terms of investors. You provide absolutely no long-term liquidity to the market. You come in, steal a little bit of money from somebody else's position, and then you leave. Your average person is saving for up to 40 years for retirement in their investments. Your average pension fund, all your institutional investors, their investment time frame is extremely long-term. So just to compare and contrast that with a day trader, you're trying to make money off those people or any other average investor and close out that position before the end of the day so that you can lock in that profit or loss. Traders can certainly be seen as the greediest because they're going to be the ones that make the most mistakes. A lot of the times, again, you're only looking, or your professional traders are only looking for like 50 to 200 basis points per trade, or just of profit per day. A lot of people will exceed that, and they won't operate mechanically with a defined exit strategy to your position, which can result in significant losses. So you got to think about who your competition is here. You're going against the big banks trading floor. You're going against the people that have retired from the big banks trading floor and are now trading from home. So it's an extremely competitive endeavor. It's something that's obviously not easy to do. Just investing in general for the long term is not easy to do. If you're expecting to make a profit every single day, that's even harder. So you just have to keep that in mind. So overall, I think day trading is pretty risky in general. Again, keep in mind, I've been bred to be a long-term investor. I've gone to school for this. I've been investing for about 5 years now, and I've certainly taken the more traditional buy and hold route. My shortest holding period for any position was about 3 weeks, and that's because it jumped up 40%, so I figured that was okay for me. I'd get rid of it. So sorry, like I said, this is a risky strategy even for your most seasoned investor. There's just political events, horrible news that comes out, or just market movements that are unpredictable. There's a lot of things that are going to happen intraday that are out of your control, or they're just unpredictable by technical analysis. If you're planning to day trade, you need to be able to have a strong stomach, because things aren't always going to go your way. As outlined in the book, you're looking for strategies that are going to work about 75% of the time. On top of having a strong stomach, you need to be able to operate mechanically, kind of like a robot. And kind of what I mean by that is, we'll get into that once I get into the strategies and framework for the strategies later on in this video. But you need to be able to have defined entry points, defined exit points, and you need to be following these strategies to a T. You can't be going on your judgment and saying, oh, you know what, I think this is going to go up today based on what I read in this article. You need to have defined points based on technical indicators that are going to get you in and out of that position. And the last thing is that you need to be able to cut out the noise, okay? So there's going to be a lot of news, there's going to be a lot of people that are telling you you're doing the wrong thing or you don't know what you're doing. You need to stick to your strategy and follow through with it. Like I said, you're going to have to be able to stomach some major losses. If you look at some of the biggest traders on YouTube, like Warrior Trading or Ricky Gutierrez, I mean, I don't think I've seen a week where they haven't posted a video where they've lost money. So if you think about it, you have some of the most successful traders openly admitting they lose money on a weekly basis, at least 1 day a week, at least 2 days a week. I mean, just go look at some of these channels. Obviously, they're the biggest channels on YouTube. I'm sure you've already heard of them, but just go check them out. You'll see that day trading is an up and down game. It's almost a form of disguised gambling if you think about it. You're putting your money in the best position to be successful, even though you might still have a good chance to lose that money. Like I said, I'm more of a fundamental analysis investor. I invest for the long term. Technical analysis is more short term and used for indicators for entry and exit points, and it's not always proven to be successful. As mentioned in the book, you're looking for a strategy that's going to work about 75% of the time. You're not going to win every single trade, but if you can win 75% of the time, that's pretty good. So overall, I think it's an extremely risky strategy. I think a small portion of people are successful with it, as outlined by the Stats by Trade Society. It's probably not something that I'm going to dabble in, but it's just a book that I read and I wanted to share with you guys. So now that I've shared my opinion, let's just go ahead and jump into the framework for day trading and some of the investing strategies. Okay, so before I get into the strategies, I just want to talk to you about the framework, which this book talks about a lot, and it's very simple, but he talks about how you need to use it to a T. You can't go out on a whim and not use this framework for a single day just because you feel the market's going to go a different way. You need to stick to this strategy if you're going to be successful with day trading. Okay, so the first part of the framework is the setup, and this is the identifiable trend in the market, the tendency in which the market tends to behave for a specific reason. So the example used in the book is how the first couple of weeks of April tend to be bullish in general and appreciating. I'm not saying that's going to happen every single year, but that's just the example that was used in the book. There's a few different tools you can use for identifying these trends, obviously like trend lines with technical analysis. You can use the Elliott wave framework and the Fibonacci sequence. I'm not going to get into those because this video will be way too long. So that's the setup. This is identifying the trend in the market. Okay, so the second part of the framework is the trigger, and this is what's going to solidify your analysis in the setup phase to get you into that first position. So what it is you're looking at more technical indicators here, such as moving averages, the MACD, which I won't again talk about, momentum indicators. You're looking at the average directional index and the relative strength index. Things of those sort, just to confirm that what you've identified in the setup phase really is where the market is moving in the next day or two or week or however long your trading period might be. Okay, the last step of the framework is the follow through, and this is the complete management of the trade from start to finish. So once you've entered your position, you need to have a defined exit strategy, and that's all part of the follow through phase. You should have a defined number of basis points that you want to make on this trade, and you should be executing those trades as soon as you hit some of those milestones or goals that you've set up and outlined for yourself. Again, as I said, a lot of traders are looking to capitalize on a small number of basis points and do that continually throughout the day, over and over and over again. This is just important so you don't get too greedy and you hold your position for too long. For instance, if you've lost, let's say 50 or 100 basis points, and you think, oh, maybe it'll come back tomorrow, maybe you're inclined to hold on to that position. What this book is telling you is that absolutely no, you should not do that. You should end that position now. Just take the loss and move on. Okay, so now that I've talked about Jacob Bernstein's framework, I kind of want to talk about a few different strategies that he outlined in the book. There is numerous. I'm only going to go over two today. There's really hundreds and thousands of different strategies you can use in day trading because there's so many different indicators you can look at. There's only two that I kind of like that I want to talk about today. Okay, so the first strategy is pretty simple. It's called gap trading, and all it is if the market opens the following day above the previous day's high, it's a sell indicator. And if it opens below the previous day's low, it's a buy indicator. So this is a pretty simple strategy, but according to the book and some of the stats that he outlined in his book, it's pretty effective. So again, you're not looking to hit it out of the park with this strategy. Again, you're looking to make anywhere from let's say 20 to 100 basis points and then get out of that position. And you want to do that every day. So if you think about it, you could do that within the first 30 minutes of the day and your trading day might be over. So I'll put up Jacob's stats on the screen here, which took me forever to replicate in Excel, by the way. But you can see here that he made a total of 379 trades, which was successful 74.9% of the time, and he made almost a total of $140,000. There's a couple of cool other stats in there. I'm not going to jump into them. This is a very simple day trading strategy, which just involves looking at the previous day's high or low and seeing if the market's going to open above or below that. Okay, so this last strategy is called the day of the week pattern, and it's more of a momentum strategy in contrast with the gap day trading. So what it is if, like we talked about, the opening price is above the previous day's high, instead of it being a sell indicator like it was in the gap trading strategy, it's actually a buy indicator for the day of the week pattern. So what you're doing is you're analyzing these patterns really for weeks prior or months prior, sometimes even years prior for a specific security, and you're looking at the momentum it's able to carry into the next day. So I'm going to put up on the screen his trades with Google. He has stats on all his trades, but I'm just going to put up the one about Google because this was the one that was most successful. So again, if the opening price of the market was greater than the high, or pardon me, its closing price the previous day, it's a buy indicator. So you could see here that it was a winning strategy about 75% of the time. He made a total of 140 trades. His average trade was about $533. And he profited about $75,000 from all those trades. So just again, with the technical analysis, when we talk about a 75% success rate, it's not 100% of the time. If anything was successful 100% of the time, everyone would be doing it.
The market would crash and everybody lose their money.
So that's pretty much the day of the week pattern. All you're doing is looking at the previous day's close and seeing if the opening price is going to be above that, and you're going to buy, assuming it's a momentum indicator and going to continue going in that direction. And you can use that strategy again with a conjunction of different indicators such as the moving averages, the relative strength index, etc., etc. Okay, so overall, what am I looking for you guys to get out of this video? Basically that I think that day trading is an extremely risky endeavor. Although some people do consistently profit profit of it and have made a living out of it, although it's extremely unlikely. You need to be able to operate like a robot with defined entering and exit strategies. You need to be able to stomach your emotions, and you also need to be able to tune out the noise, because you're going to be a lot of the times going against what the market is doing that day, or you're going to have your own ideas to be successful here. Now, there's plenty of other strategies than what I outlined in this video. There's really hundreds and thousands, and I encourage you, if you ever plan to day trade or get into day trading, to research some of those strategies. I'll put some of them up on the screen now that I didn't mention in this video, but you really should look at them and look at paper trading before you get into full-time day trading, which is basically trading with fake money. It's a little bit different because paper trading, your trades will go through automatically. You don't have to worry about the bid and ask and like fulfilling orders and things like that. So it's a little bit different, but you should certainly paper trade before you get into any day trading for sure. For me personally, I will stick to my long-term fundamental analysis. I don't think day trading is for me, but if you got any value out of this video, I hope you enjoyed. So don't forget to smash the like button if you enjoyed. Subscribe to the channel if you haven't already, and share the video with a friend if you learned something. So as usual, guys, have an incredible day, and I'll see you guys in the next video. Peace out.